Hey, what's up everybody? It's your mortgage expert, Brian McCauley here. So are you looking to purchase a property here in the near future and you're not exactly sure if you're prepared, if 2023 is the right time, if you should wait or you should buy? Stick around. In this video, I'm going to teach you everything you need to know. So listen, we've been talking to so many people in Dallas-Fort Worth that are out there shopping for houses right now. They want to become homeowners. They're just unsure if now is the right time. They don't feel like they're fully prepared. They're not exactly sure what the future holds, and they're trying to make that decision. Do I buy now? Do I keep renting? Do I wait and maybe let the market come back down? Or if I wait too long, maybe I miss out on the property and maybe interest rates start to drop and things get a little bit too wild. So I want to go over a couple things with you today when you're a buyer in this market to try to get your footing, figure out exactly what the future holds, make sure that you're fully prepared with a good plan, so no matter if you're looking to buy in 2 or 3 weeks or 2 or 3 months, you won't get stuck on the sidelines and you'll be fully prepared, okay? So tip number one is the most important thing you want to do, regardless if you're looking to buy in a couple weeks or a couple months, is make sure and get a full pre-approval. And this is what I mean by a full pre-approval. When you are a potential future homeowner or potential buyer, a lot of times people don't know any better and they'll just go to their depository bank or some online lender and they'll just kind of tell people over the phone and maybe do a simple application, but the lender doesn't verify all the documents. They don't do their due diligence. They don't take a look at all your pay stubs and W-2s and tax returns and all that stuff. And this is crucial and important when buying a house for 2 reasons. One, you want to make sure that you eliminate all the risk. You want to make sure there's no big surprises. You know, over 65% of home loans don't close on time, don't close smooth, and the potential home buyers are upset with their lender and upset with their realtor at the end of the transaction. And by getting a full pre-approval, that will avoid all that. Yes, it's a little bit of extra work. Yes, it takes a couple extra days. And yes, there are a few more documents, but it's the right thing to do because all of that stuff doesn't go away. You want to make sure and do it early so that way there's no big surprises. You close smooth and on time and you'll have a great experience. Now, that includes verifying upfront all your financial information, verifying upfront, at least discussing all the asset information. What do you have in your bank account? Where's all the money coming from? What are the sources of the money? A lot of times buyers think, oh, I've got $10,000 or $20,000 in my checking account, savings account, or that's what I have, that'll be okay. Lenders are very picky and specific about not only the amount of money in the account, but the source. Where's the money come from, okay? In my industry, it's kind of strange because obviously majority of home loans are regulated at a federal level. So there is a anti-money laundering and suspicious activity reports that runs through all the assets. So what lenders look for is non-payroll deposits, okay? So if you work at XYZ company and you've got a direct deposit from that company, that's okay. But if they see transfers, wires, cash deposits, we're gonna stop and ask and say, hey, where'd that come from? Some things are acceptable, some things are not. But discussing this with your mortgage professional up front about not only the account or the accounts that the money is in, what the balance is, but what's the source of the funds? Because if there's anything in there right now we need to discuss, you got to get it early. Or maybe you're saying, hey, you know, I'm not going to have the money for a month or two. I'm waiting on some payroll checks. Maybe I want to get a gift from a family member. Make sure and discuss all this up front, because the hardest part about it is when you don't disclose all this early, there can be hiccups and snags late. And the third most important piece is your credit. Lenders care equally just as much about your credit score as your credit profile. Your score is just a result of your profile, and sometimes the profile is not 100% accurate. There can be things on there that are small negative items that you need to get corrected or fixed really quick, and if you don't prepare early and you try to put an offer on a property, you may not allow yourself enough time to make the corrections if there's any corrections needed. On the flip side of the coin, your credit score might be fine, but maybe something with the credit profile needs to be adjusted, or maybe it's something that's not 100% yours, and lenders might ask you about it. Hey, what if your credit card balance is too high, but you paid it down a week ago? By paying it down, we say, hey, you can get your credit score up 20, 30, 40 points, and it's already been paid, so we want to update for you. But what happens if your profile has something on it that is not 100% belonging to you? Maybe you have a credit account that you are an authorized user on, maybe a spouse, maybe you were younger and you went on your parents' gas card or credit card or something during college, and some of that activity is still flowing through there. And so the lenders are going to look at the score, but they're going to look at all the trade lines and say, hey, we want to make sure that what we're seeing is accurate. You know, most good mortgage advisors are on your side. I tell everybody we're good cop, not bad cop. We're here to make things happen for you. We're here to help you get a home loan, and we'll make sure that you get to the finish line smooth, and we don't have to ask you all these questions further further down the road. And so what we're trying to do is be proactive with you and make sure we fully understand the financial portfolio, make sure we understand your credit, make sure we understand your income and assets, and so that way we can get it all squared away. Once you're fully pre-approved, you start the fun part, which is shopping for a house. Now, the preparation component for you as a buyer is once you get everything squared away with your mortgage advisor, you've got a full pre-approval, you know your buying power. A lender like myself will put together a couple different total cost analysis, put together mortgage payment strategies, 5% down, 10% down, showing you exactly, hey, here are the options. Use this as a placeholder. So when you go out into the marketplace and you're looking at houses, there are no big surprises. And we'll discuss that with payments and taxes and insurance and cash to close and all these things. But the second piece you want to be prepared for is making sure that you stay fully connected with your realtor on the market. They are the ones that are in the street and the neighborhoods every single day, and they know the pulse. They know if homes are going quick. They know if homes are sitting around. They know if there's a lot of houses available, or they know if there's a lot of houses not available. And I think as a buyer, that's where you need to mentally prepare is, hey, let me get my financials right with my mortgage advisor, but let me get my expectations of the street and the market right with my agent. Because a lot of times buyers can be emotional and they say, hey, this is what I want, this is what I'm looking for, but the market is not giving it to them, and they set an unrealistic expectation with themselves, but also set an unrealistic expectation with their agent. And so you've got your realtor out there that knows the market better than anybody, and they're working really, really hard on your behalf, but the expectations that you have may not be realistic, and that doesn't set you up and doesn't set your agent up for success. So, those are the two major things that you need to do first to get yourself fully prepared, regardless if you're buying in a couple weeks or a couple months, is a full pre-approval, and then have a really good consultation with your agent about your expectations on the house, price points, time frames, all that. And then your agent can do the same to you and explain, hey, based on what you're approved for, based on what you want, based on the areas that you're buying in, here's what the market looks like. This is how many houses have sold in the past 60 days. Here's the average days on market. So you understand the temperature of the market and what to expect, what offers to make, what properties are available and what not. So that way you guys are on the same page. The last thing I want you to be mentally prepared for is when buying a house, it is always the best practice to give yourself more space and more time. Better to be fully pre-approved, 100% set up, and maybe not find a property for 30 or 45 days versus trying to do all this stuff at once. It ends up being a really cumbersome path to navigate. There can be a lot of turbulence, and it doesn't set you up for success. As this market continues to heat up, and as interest rates eventually trend down with inflation, you will start to see more and more buyers come off the sideline because they are eager to get these lower rates, because they are eager to make sure that their monthly rate and their monthly payment is affordable. The downside of waiting too long is if you wait with everyone else and everyone floods the market at the same time, yeah, maybe the rates are a little bit lower. Maybe they're trending in the right direction. Maybe you save $100 and maybe even $200 in the payment. But the flip side of that coin is you have a ton of people going into the same market at one time. There's not enough inventory to supply everybody, and all of a sudden you have a major, major price spike because of all the demand. And then it becomes much, much harder to get a house. And sometimes what you save in the rate and the payment, you'll actually end up overpaying for the house. And so it ends up being a counterbalance when it comes to the payment. So you got to make sure and prepare for these things, whether you're a first-time buyer or a fifth-time buyer. It's really about financials up front, having a great conversation with your realtor to make sure you have great expectations about the market, and then making sure you stay ahead of the curve given the amount or lack of inventory that's out there and interest rates trending down. And as you move into 2024, interest rates are only going to continue to trend down with inflation as inflation comes down, and that's a great thing for consumers, but it will drive more competition and make it more difficult on you as a buyer. So make sure and use these three things when you're getting prepared to buy a house. So listen, I hope you found this video useful. If you did, do me a favor, like, comment, subscribe, even share this video with somebody you know that could benefit from this information. And listen, if you want to have a deeper or further conversation about your home buying journey, have any financial questions or want to talk about your free pre-approval, do me a favor. Call us, email us, text us. We're always here for you. Until next time, stay tuned.